I heard a quote recently that I really like, and I want to start using it. And that quote is, amateurs think about how much money they can make, professionals think about how much money they can lose. Let's apply that quote to the kind of environment we're in right now and determine what we should do. And then we'll get into the fundamentals, because there was a little bit more Fed color today that might have led to the market coming off the highs, and it was just a very interesting day today. But nonetheless, how are we viewing that quote? Well, we talked about last week how stocks seem to be expensive and it might make sense to wait. Right now, stocks are priced for growth. You don't get above average S&P 500 earnings multiples unless you're expecting to grow, or life expectancies are supposed to go up tremendously. And I mean, life expectancies are supposed to go up a little bit, but not enough to justify the massive above average earnings multiple. Let's not forget, above average means above average. It means that half the time multiples are lower. We don't just need a hardcore recession to be below average earnings multiple. We could have an earnings flat situation, and we expect that to be the case. And this is not, we're not at trough earnings. I saw some research today saying that, earnings don't need to go up for the stock market to go up. Well, as of right now, earnings are just beginning their decline. Yes, the stock market can go up and can bottom when earnings are declining, but that is after earnings have already declined substantially. Earnings have yet to really decline. They've started, and there's plenty of color as to what's going to happen next that we can get into in just a second. But we're really, in my opinion, in the early stages. The market is still trying to price the previous paradigm in which we had a stimulative Fed and printing money, and it will be many, many years, is my assumption, before we get close to anything like that. We'll get cuts before that, but we won't get cuts to zero. We'll get cuts from, 5.5 or higher down to the low fives and down to the high fours. It's a long way from zero. A long way from zero. So we have to take that entire paradigm, we have to throw it out the window. Let's not forget, it was less than 1 year ago when the Fed was printing money. I believe they stopped in March 2022. So, crazy, right? Crazy. We're still pricing that paradigm, expecting growth. I mean, you have so many companies that are massive companies already trading at over 20 times earnings, and they're not growing. So in my opinion, that is a layup short, but we'll see what happens. That's just my opinion. I'm not always right, but that's just my opinion. Anyways, let's get into what the Fed talked about today. Jefferson, new member, Biden appointee, I believe. He talked about, and hold up, I tweeted something last week. I said, this guy was talking, Jefferson. It was the first one after the PCE data came out. He's speaking at Harvard, giving a general overview to a class, talking about the Federal Reserve. Actually, I don't want to bring up the point I was going to bring up, which was he happens to be black. And guess what inflation impacts the most? Who inflation impacts the most? Those least able to bear the burden of it. And we always hear how black people are disadvantaged. So I find it not surprising they picked somebody who represents that community to talk about PCE versus CPI. We've seen massive moves in the market off of CPI and PCE, but my read on the Fed today is let's take the CPI and let's just throw it in the trash because it doesn't even matter. What matters is PCE. Let's not get confused here. Let's not get confused. PCE is what matters to the Fed, particularly PCE excluding food, energy, and housing. But they said they still want those forces to get down to 2% inflation. So we can just call it PCE as far as I'm aware. Anyways, PCE inflation just hit the highest month-on-month growth rate that we've seen since before 2022, since 2021. Interesting. I wonder how the people who say inflation is falling like a rock, what they have to say about that. I mean, It's the highest month on month. It's the highest inflation. Biden called previously 0% inflation when CPI was month on month. So when PCE is at the highest in over a year, month on month, what's he going to say? New high in inflation? I mean, that's what it is, right? Month on month, we're inflating quite a bit here. Not only that, the absolute level has stayed relatively flat. It's kind of been volatile just a little bit. But let's not forget, you're comping to a much higher number. So you're getting 4.7% on a previous 4-point-something% instead of a 1 or a 2%. So it's still there. It's not going away. And it's hot inflation. If you take that 0.6% and annualize it, it's 7.2. So we best get this thing under control. And as far as I'm aware, February was pretty similar to January. I mean, we had a strong stock market, lots of spending. Nobody is really pulling back yet. So it's safe to assume inflation is continuing. And we'll see what happens when that data comes in. But March 1st, we have Neel Kashkari talking. He's a former Dove turned Hawk. So it seems like, in my interpretation of how they're kind of lining this up to start the new month, they're getting the former Dove turned Hawk to lead the pack to show that they're all committed to 2%, as they continue to say all the time, and demonstrate that they're going to remain in the hawkish tilt. And they might even add another hike in March, is my assumption. Anytime they get hotter than expected inflation, just staying hot, I think they're going to add another hike because they've hiked all this way, and we just had the hottest month-on-month PCE. What are the bulls going to tell me? What are the inflation is falling like a rock people going to tell me? Leave it in the comments below because I would love to hear it. I don't know what they're going to tell me. I have no idea. I don't know what they can tell me. I mean, it's 0.6% month-on-month PCE. Listen to Jefferson, 0.6% month-on-month PCE. I mean, there's no progress on inflation. There's none. They haven't done anything. So, at least based on how the Fed is perceiving it. They just told us to throw away CPI. It's quite interesting. Quite interesting. So, one more thing. The consumer is deteriorating. Forget what you heard about last year. Strength, high savings, whatever it is. They're going to Walmart. They're not going to Bergdorf Goodman. They're going to Walmart. The person making over 100K, not going to Saks Fifth Avenue. They're going to Walmart. Not going to Nordstrom. Nordstrom, we know, did not have such a good quarter, not such a good holiday season. They're going to Walmart. Maybe the millionaire isn't worried too much, but that's 0.1%. The 1%, they're going to Walmart. They're going to Walmart. And the 2 to 10%, they're going to Walmart too. Everyone's going to Walmart. Walmart's doing well, and Walmart does well in recessions. So unemployment might stay low because a lot of people retired. We unfortunately lost a lot of people because of COVID. And they might not want to call it a recession, but I expect the economy and the market is going to act as if it is a recession. So we have to keep that in mind. We are seeing people go to Walmart. End of story. It's really as simple as that. You don't go to Walmart as a person making $100,000 that often, but they're going there often. And Walmart is making a point to say, hey, those people, they're coming to Walmart. More importantly, the Fed, Jim Bullard, talked about that specifically. So that's today's video. We'll see what happens, and see you tomorrow. Until then, peace out.